Good afternoon. Good afternoon. Good afternoon. Please, from the back end, I want to confirm if I'm audible, if I can be heard. So, please, can you confirm to me?
Okay, yeah, we can hear you loud and clear.
Okay, great, 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 great. Thank you very much. You're welcome once again to the Real Estate Today, sponsored by Ubosi, Eleh and Co. This is a webinar that comes up once in a month to discuss topical issues and where we bring in wonderful guests to dissect topics that would be of interest to industry players in the real estate sector, investors, as well as people who want to play in this space. So the month of May is such another time. Today is the 29th of May, and we're going to be delving into another wonderful edition of Real Estate Today, brought to you by Ubosi, Eleh and Co. My name is Olusanjo Fawali. I'm your host this afternoon. And like I said, it promises to be a wonderful time this afternoon. So it's good morning, it's good afternoon, it's good evening, wherever it is you're watching us from. Because I know we've got audience from different parts of the world who join us to watch, and those who also go back to the YouTube to watch this edition. So without wasting too much of our time, I just want to give in, as usual, some of our rules and some of the things that we should be aware of. This is the webinar that we can be opportune, we can be given the privilege to make our comments, to make our contributions. And as such, we want to let you know that at the right time, you can probably send in your question even whilst the presentation is ongoing. You can use the chat box, you can use the ask question box to send in your questions, and you can be sure that your questions will definitely be taken. And if you also want to, if you desire to be promoted to ask your question directly or to make contributions or comments from the back end, you can just do that by a show of hand, raising of your hand, and you can be sure that we'll give you that privilege to ask the questions, and it promises to be a wonderful time. So we're in for a good time this morning. So I want to implore you to please call your friend, tell your friend to tell another friend, and to tell another friend that we are just starting and we're about to get into it. And like I said, it promises to be a wonderful time. You've not missed too much. Pick up your phone, grab somebody and call somebody and say, please call my friend, call this guy, that we are live on air and it's about to go down with this topic. It's a raining afternoon here in Lagos. I don't know the other part of the world, but it's a raining afternoon in Lagos. So you may want to grab a cup of coffee if you can so do. And let's get into it. Yes, I hope that is it. Please, yes, I can see that attendance is swelling. I can see a lot of people are joining right now. That's good. So please tell somebody to join in right now. So without wasting too much of our time, I think last time we treated the topic that has to do with everything that has to do with title, documentation in Nigeria, and maybe as Lagos State as a case study. But today we're going to be treating a topic very, very interesting, I must tell you, particularly because all through, I'm not sure we've dealt with something in this line before. And that makes it a lot more interesting. We're going to be delving into a topic. I'm going to read the topic, and thereafter, I'm going to introduce the guest and also read just a brief citation of him. Then he's going to delve into it immediately. The topic for today is property development and finance in Nigeria, unlocking capital and structuring sustainable projects. Let me take it again. Property development and finance in Nigeria, unlocking capital and structuring sustainable projects. And to do justice to this topic today is no other person than architect Samuel Banye. Yes, so architect, if you can show your face, and whilst I read about you, hey, great. It's good to see the architect Samuel Banye is here with us. I'm going to read a brief profile of him before you just delve into it. When we have an architect in the house, you must know that something big is coming. So please, again, get to tell your friends, let them join. I'm going to read a brief profile of that Banye, and afterwards, I'm going to ask him to just delve into it. Again, like I said, I like repeating this. Don't wait for the webinar to be over to ask your question. Let your questions come in immediately. For as many of you as is speaking, you have questions, please type it on the chat box and the question box, and let's make this a very, very interactive and very interesting session. So I'm going to read about him. Architect Samuel Banye is a multidisciplinary architect, a real estate development strategist, and a project management professional with nearly 2 decades of experience delivering impactful architectural, construction, and infrastructure solutions across Nigeria. He currently serves as the Director of Projects, Technical Service at Carlton Hall Projects. He is the founder of Formetric Works and Company, where he leads innovative, sustainable design and development initiatives across residential, commercial, and infrastructural projects. With a solid background in architecture and environmental design, Mr. Samuel combines deep technical expertise with strategic management skills. He has also trained in management and advertising at Boston University and is currently advancing his knowledge through an MBA at Rome Business School and a master's in housing development and management at the University of Lagos. A certified Six Sigma Green Belt, member of the Project Management Institute, PMI, and a registered architect with Archon. Architect Samuel brings a system thinking approach to every project. Ladies and gentlemen, of course, I can't ask you to clap now because even if you do, I'm not going to hear your sound. But hey, ladies and gentlemen, please can you welcome with me Architect Samuel Banye to take over this session. You're welcome, sir. It's good to see you and to have you on this webinar.
Thank you, Mr. Fawale. How are you doing today?
I'm very good. I'm very good. And it's good to see your smiling. And I'm so very expectant today. I'm very expectant. And every audience are also expectant. You can delve into it right away, sir.
Thank you very much. And good morning, everybody. I trust that you are all hearing me.
Very well, we can hear you.
Okay, good. So at this moment, I'll try to share my screen. Just give me a moment. Okay. All right. So, yes, the topic before us this morning is property development and finance in Nigeria, unlocking capital and structuring sustainable projects. We will understand that development and finance are two sides of a coin. One of them can really not fly if the other is not available. And so it becomes very important that for us to make sense of development in Nigeria, we must have access to funding, which is the bedrock of it, really. And this session is an attempt to help us see other ways by which we can raise funds and make it more viable, where we can give solution to the housing needs in Nigeria. I mean, we will understand that urbanization is it's widening by the day, and when there is the influx of people, urban migration, that's the rural urban migration, there really will be need for infrastructure to support the growing demography and population. Also, there will be need for accommodation, residential facilities to take care of them. So this have become great challenge within the Nigerian space. I mean, if if you stay in Lagos, you would understand that the population of Lagos has grown beyond its borders. And now people buy water for land and all of those. And of course, the further we go into the waters, we know that it's more expensive to develop. So we have to bridge the gap between the supply and the demand. And how would that be possible if we don't have access to finance? So our attempt this morning is to see other ways by which we can raise finances for projects. Now, we would understand that raising finance for projects or developmental projects is different from raising finance for business. I'm starting out a new business. I can go to meet my family and friends, raise me some few millions of naira, and then you do your business and then come back to them. But one entity may not be able to raise the finance that is needed for some scale of developmental projects. And that is why we are here this morning to look at the options that are available with us, available for us, the mixes that we can have so that we can make sense of our developmental approach. Yes, I'm an architect, but of course, you know that at the end of the design work, we still come back to the field, boots on ground, hands in pockets, ready to finance whatever thing we have on the paper. And if we don't see the development on ground, what is the purpose of the architecture? So we go to the keywords. First of all, property development. And that is the proper process of acquiring land, financing, designing real estate projects so that the property development really is this part of acquiring and designing, which is more like the pre-process plan, inclusive, which is the end-to-end, inclusive of all of the discussions from the conception of the design, from the conception of the thoughts to do a developmental project to the eventual development and the building standing on the ground. That is property development. Then finance is the management of money, investments, and funding sources used to plan and develop and maintain the projects. So in this case, it is management of the money and the funding sources. Now, it is different from capital because capital is the money or asset invested in the project. So the difference between finance and capital is the fact that one is the management of the money, the other is the money itself. So capital is the money itself. We also know, if we do a bit of deep dive, we also know that capital goes beyond money. The individual himself is also a form of capital in the investment. All of the team that gather to bring up or bring the project to life are also capital. But for the purpose of this discussion, we will keep capital as money. We're still defining the keywords. Unlocking capital. It is an attempt to seek for innovative ways of getting or raising funds for projects. Now, there are so many ways to do that. You have the joint venture partnership, you have the real estate funds, you have the PPP arrangement, and all of those things. So that is alternative ways of alternative methods of raising funds for projects. Now we go to structuring. Structuring is the organizing and arranging a project's financial, legal, and operational elements. Now, in this case, it is to make it viable. Now, how do we structure funding? How do we structure financial, legal, and all of those intricacies within a project. We know that our developmental project is beyond just the drawings on paper, mortar and bricks on ground, and it goes beyond all of those. We know that there's a legal side of the project, there's a finance side, there's an operational side, there are technical sides. So structuring this, arranging them in proper manner so that the project eventually becomes viable at the end. Now, this also involves the partnership model that we choose to employ. Now we go to sustainable projects. Now this is trying to define the keywords in the big topic on the table. Now, sustainable projects, this is property development that are financially profitable, environmentally responsible, and socially inclusive. We will know that within the SDG goals, Sustainable Development Goals, there are so many items on it. Now, for the property developer, your project must be profitable for you to remain in business. For us to sustain you in business, your project must be profitable. It has to be responsive to the environment. It should not be harmful. And then there should be the social side of it, where people can relate to the development on ground, which is the social side of things. Now, we have a few challenges in the Nigerian property market. Number one of it is the fact that interest rate is high. And that makes it almost a zero option for property developers. By the time you take a facility at between 28 and 36%, and you have to hold the funds, you can't even do it for more than 1 or 2 years. And then if you do 36% of, say, 1 billion, what profit are you making to keep you in the business for the next cycle? So it makes it a bit of a challenge as a financial challenge in the Nigerian property market. The finances available traditionally are short-term. They're under 5 years. If you have to do heavy projects, not single building development, maybe you want to develop a land as large as maybe a 70-acre land, it's not a 5-year project because there are so many things involved. A project like Eco Atlantic, a traditional financing can never be an option. And those are the challenges that we have. In the Nigerian mortgage system, the infusion of funds is so little, such that it's almost not an option. And then high risk of inflation, currency devaluation, volatility of exchange rates, and all of that makes it also difficult to seek for cross-border funds. So you may not, if you are thinking about Forex as an alternative, imagine you picked up a facility, say from a company in Europe, for instance, and then you picked it up before 2023 elections and hoping that it was going to make sense. Of course, at that time, your risks are calculated, your markets you understand, and at the change of a new government, was it 650 or 670, now moved straight to 1,500, over 100% increase. And then you ask yourself, where do we start from? So those are the challenges that we have. A bit of instability in the market have actually crunched the whole financing thing. And that is why this subject is on the table today. so that we can look at the alternative strategies that we can employ. So I'll just run through them a bit. We have equity partnership, we have debt alternative, and we have government-backed initiative. On the first one, joint venture partnership in the equity partnership. Now, as the saying goes, or the caption, equity partnership, it means that we all have a contribution in the project. So for a joint venture partnership between the landowner and the developer, we could also have joint venture partnership in multi-layer form. So the landowner, which is about the simplest form for now of partnership, there is a landowner and there is a developer. They come into a discussion, have an agreement, have a sharing formula, have an agreement also on what to be developed and the timelines. Yes, if we have to dig deep into this, there are a bit of intricacies that we'll have to see, but this is an option where you don't have to, as a developer, have to bother about all the funding on the table. You don't have to bother about buying the land. You don't have to, the only thing you are bothered about is bringing up the project. Let the project come to life. So I give an instance where this becomes very important, where you may find it viable. So let's say there is this developer A that has, say, 300 million naira and is interested in development. And for the sake of this discussion, let's assume that we can get a land of 300 million inside of GRA Ikeja, which is, of course, right now very, very impossible, but we hold that as an assumption. Now, as a developer, all the funds you have on the table, from whatever sources you have gotten them, is 300 million. If you buy a land of 300 million, only God knows how long it took the developer to get the 300 million in the first place. And then he has to wait maybe similar cycle to get it. And then he may not build anything maybe in another 12 months. But you know, once there's the land on ground, he already has the funds that he could infuse. And then he brings it in. And then in 12 months or less, depending on the size of the project, the landowner is smiling and he also is smiling, everybody holding their capital and their profits. That is the joint venture partnership under the equity partnership. Now, the private equity real estate funds, this targets middle income and commercial properties. Now, this is a collection of funds from private individuals. It could be an investment company. It could be me, my friends and family that have money, and then we'll bring it together for real estate purposes, real estate development purposes. It is called private because we are not under any regulatory system of the government. So, and this is typically targeted at high return projects. It is longer, it's for a long term it goes as far as 15 years. And so it means that everybody who has infused funds here will be long distance kind of runner, as it were. And this, depending on the scale of the projects involved, there could be a mix of this real estate, this private equity funds, and a bit of debts. But largely it is the private equity funds where the funds have come together from different individuals of similar interests, fund managers, institution at whatever level, bringing it in to support this project. Now, if we look at the characteristics of the private equity real estate, you will see that the risks are spread. And that is why it's an option where yes, the risks are spread, but also a long-term thing. And so many things could happen in between the line. But this discussion is not for us to treat the advantages and disadvantages. It's for us to see that these options are available to us. So private equity real estate funds are funds that are gathered together by individuals and or investment funds company. We go to the number 2, which is the debt alternative, the REITs, which is common. I mean, everybody in the property development space knows about REITs. And I mean, we've not done much of it in Nigeria, but the purpose of REITs is to invest in income generating assets. So there are some things we cannot use the REITs for. But now the difference between REITs and the private equity funds is the fact that one is regulated by government, which is the REITs. It has to be registered with the Security and Exchange Commission. But the private real estate, we can do it under our roof with just some paper agreements binding all of us to the deal. Now, project bonds. Project bonds, these are long-term debt instruments where funds are raised for large projects. Now, when I mean large projects, maybe I'm looking at a project of, say, 200 billion, 300 billion, where you will need the man with a 1 million naira power to put in his money, and then you will need the size of a 1 billion naira person to put in his money. So at different levels, everybody puts in their money. If you remember during Fashola's time as the Minister of Works, yes, he raised a bit of these bonds via Sukuk, and people bought into it, bringing in their monies for that project. And there is regular interest payments, and after the period, their capital is gotten back, and then they can recycle as the need requires for them. And interests are paid regularly on the project bonds to the investors. So on this, the spread of the pressure, as it were, or the financial pressure, the spread is spread is massive. So everybody is coming in. So I think the government uses this, and anybody who is interested is because of the low interest rates. And really, you agree with me that interest rates are very important. Whether we get it as single digits or double digits, we know how it impacts our businesses. So the project bonds usually has its own promises, but never like the traditional commercial loans. Now we come to Islamic finance, which is non-interest finance. Now, the Islamic finance follows after the Sharia law, and the main idea is there is no interest. It holds that you cannot make money from money, so that you put your money in the bank and expect your banker to give you 15% after 90 days and all of those. By the Sharia principle, this is wrong. But why is it relevant as an alternative financial strategy or financial means? Is because you bear the risk together. There's a sharing of profits, but there is no interest payment. So it means that money must be put to use. So you have this project, say a bottle of water, we want to invest. Say, okay, so since it's property development, we have a 3-bedroom development to do, for instance. We get these funds, we put it on it, say we build for 100 million, and we agree on whatever the sales price will be. Now, at the time of sale, we sell at, say, 150, hypothetically right now. We sell at 150 million. We already have a profit of 50 million. So based on agreement, on the percentage of sharing, we share that 50 million on it, so that whatever percentage goes to the funding party, it goes, and the funds that goes to the developing party goes. Now, in this Sharia system, the two that I may want to really dwell upon a bit is istisna and mudaraba. So in this case, istisna is built to order. So you already have people that have told you, we want to build and this is our specification. So you build to that order. You already know that you have a buyer. If you don't have any order, then you don't build. So that way you are sure that the funds that you are investing already has somebody to pay you for it. Now, mudaraba is a system where one person brings the money and the other person manages. So mudaraba is a form of joint venture partnership. That is what it is practically. Now, there are other forms, the ijara and the musharaka. They are not exactly for development. Those two come after development. Ijara is lease, and then musharaka is a form of lease after construction, after the project is delivered. So, but these two work for the project from the beginning. Now we go to government-backed initiatives, the Federal Mortgage Bank kind of thing, the NMRC, the Family Home Funds. These are initiatives that we can harness. And we know that currently the MRIF is ongoing. I don't know if the promotion is wide enough, but it's ongoing. And this offers cheap loans for housing, so that we have affordability, we have accessibility, and people can stay within their class of income to get accommodation. So that is the government-backed initiative. Now, to structure a sustainable real estate project, we need to first of all do a feasibility framework. Markets, research, where is the land? What is the demand? I mean, what are the infrastructure available? Who are our target markets? What is the demand within the location? And then understanding the risk available around what you are doing. Don't forget, like I said earlier, our property development business has so many sides to it that make it a single whole. There is the financial side, which we are discussing right now. There's the legal side, there's the technical side, there's the environmental side of it. And so we need to have a proper framework of this feasibility so that we are sure that our business is not a failed project from the beginning. Number two is to structure a sustainable project. We must be able to have our project in compartments, phased development strategy. We should not go into a project that we cannot break into packages because of cash flow. I gave an instance earlier where we had to raise, for instance, 300 billion. No single financial institution will give 300 billion. Even if you pick up funds from equity funders, equity partners, the funds may not come in at the same time. So you need to be able to package the project such that you can deliver maybe 2 per time, 10 per time, as the funds available can permit. So this is also important, that we don't put up a project that cannot be compartmentalized. It's very important in our structuring attempts for a sustainable project. Now, facility management. You want to do this. I bet you want to do it. Apart from the fact that there is a financial benefit to you, the developer, you also want to see your project in 5 years and still be proud to say that we were part of this project. We nursed this project. And what is facility management really? Is to retain the value of the property for a very long time. Keeping it in that shape keeping it in that shape for a very long time. And then we see the Jakande buildings at along the Lekki-Ekpe corridor. If you have passed there lately, you see that those buildings have come down. Why? Poor maintenance. Poor maintenance. It does not serve the beauty that is required along the corridor. And I must tell us, why did that building essentially come down? If we go through that Jakande Road to the end, towards the ocean, there is a new development there. And the development is a deliberate one. They've taken over part of the ocean like it is on Eco Atlantic, and they built some nice structure. And then you imagine yourself go from Lekki-Ekpe Express into that road, and you see this slum-like landscape ushering you to your 5-star abode. At some point, you will back out. You just say, oh boy, we don't feel safe here. And then you know what I mean. But those buildings have come down. Why? Poor maintenance. So if it was a private developer that took up that responsibility and the structure or the facility is managed, we are sure that the building will still be standing today. And that project by the seaside will also stand, and they will complement themselves. And then they will see people like them as they usher themselves into their abode. Now, the ESG, environmental, social, and governance compliance. In the present day Nigeria and in the development space, anybody putting up a project without a consciousness of the ESG may not be doing himself a great favor. Now, we have all the band A, band B, band C, and all of those bands kind of thing in our electrical or electricity industry. It will be good to have alternate power sources. We need to be conscious of the environment so that we reduce the greenhouse effects. We reduce the number of times we put on our generator if we must. So these are the things that we must look at. We must think about our community as we develop. So you have a land of, say, 10,000 square meters, and there's no playground for the children. That may not be very good. And then people come around and ask, where would our children play? Where would they ride their bicycle? The road is so narrow. You know, the drainage, we don't know where it is going, whether it is going up or going down. There's no clear channel. So these are also very important so that we come across like ethical investors that has plan for the future. Because for your project to really attract the funds that is required, you must be able to demonstrate these 4 things that have been mentioned here. And I tell you with authority that there are funding bodies that are willing to fund projects that satisfy this. So if you are struggling with funding, maybe you don't even want to do any of this that we have mentioned above, right? You want to get, say, an angel investor or an equity investor from the diaspora, this is what they will check for. How did you structure your project? Does it meet these 4 criteria? And then there are other things they will look out for. And then you can get your funds without headache, with rest of mind, and everybody is good. But we must be compliant in this direction so that we also know that in property development, as we think about the business side, we think about the future and think about our environment. Now, we look at the public-private partnership as a game changer. Public-private partnership is actually government and private investors. It's just simple. Government is public. You and I, the developers, are the private part of this partnership. Now, land for infrastructure swap, where developers receive land in exchange for building public infrastructure. So if the government pays you with land to develop infrastructure, you know, if you buy or you procure a 20,000 square meter land, you did not buy roads, you did not buy drainage, you bought lands. But when you put up the structure, you must put roads, you must put drainages. And so, who pays for them? If the government gives you, for instance, something in the value of what your infrastructure will cost for the development, then it may make sense for you to go ahead and do proper one. So it helps you, it helps the developer to rethink the approach on how to put in the funds and in the design of the infrastructure that supports the development. We know that sometimes we may not fully have access to this single 10,000, 20,000 square meter land, but we have an old road existing, not properly done. And as a developer, say you have like 10 plots along that stretch of road. If you have a discussion with the government to say, okay, we want to do this because we have development work to do here, how do you compensate us knowing that this road is a public road and it's supposed to be government owned? You can have that discussion and they say, okay, fine. In this regard, we can give you something in the equivalent of whatever it will cost you to do the road. And then you factor in how you want to get the funds to do it. In that way, it becomes like a trade by barter. Now we have the build, operate, and transfer, where the private sector builds and operates the facilities. I mean, this is very familiar to us. This is very familiar to us, where we have this BOT kind of agreement, build, operate, and transfer after a particular period. And we give it back to the government, who does whatever they like or they deem fit with it afterwards. Affordable housing projects, co-financed by government and backed by mortgage schemes. Now, this becomes important because it would make housing more accessible to the people. If there is a project co-financed by the government, there is, once the government is involved, there is this assurance that you would have buyers, you will have people that will take them up. You are sure that for you, the investor, developer, your funds will not have to stay for too long before they return. And then on the demand side, the intending house owners also do not have pressure in making payments because there's a mortgage scheme that supports the system. Now, the fourth game changer part of it is the joint development agreements, where risk and rewards are shared between the public and the private partners. So in this case, you know that the problem or the risk that are available is not entirely one party kind of risk. It is shared. And with government, you are a bit safer because they will always meet up their own part of the deal, at least based on the agreement, without looking at the political landscape, assuming that all things are equal. Now, what are the next steps that we want to look at? As developers, we must know that our attempt to push forward while embracing innovative financing, we must build partnership. It is important that we build partnership. I'm an architect. The real estate valuer is very important to me. How? I may not fully exhaust the reason. The quantity surveyor is important to me. That's investment banker is also as important to me. And then the politicians. So we must find a way to build strategic partnership so that when investors come in, they are also sure that there is a good system that they are coming into. Imagine a developer system where you have the architects, you have the engineers, you have everyone represented in the built industry as a stakeholder. They feel more at home. So on the technical side, you want to build partnership. On the finance side, you must also have to build partnership. And that is why it is called strategic. So it's not anybody that you partner with, but you have to partner with those that support the drive and the purpose and the vision that you are carrying. Government agencies also must continue to modify policies, creating enabling environments for real estate development to thrive through simplified land administration. And you would agree with me that land administration is a big concern. And we hope that in this webinar, we have a few representatives of governments who are listening to us and can look at this, and we find a way to simplify things. Let's also know, by way of digression now, that a registered survey is not an ownership title document. It does not confer ownership. But I think the land administrators on the side of the government have not said so much about this, and people have been deceived. As developers also, let's also not be carried away by the trend of we have registered survey. It does not confer title or ownership to anybody. It just shows you that this land exists in so place, and this is the boundary of the line of the land, full stop. The government also needs to do more about mortgage markets. A lot needs to be done. The Murphy Fund that has been currently disbursed cannot do much, and the restriction is 100 million per household. 100 million, and you have to make a deposit of 20% of that. So it is not a bad deal, but in the current Nigerian market, which, yeah, you will get houses of 100 million, but in what location? I'll leave us to answer that question. So as we conclude, unlocking Nigeria's real estate potential, we must leverage strategic partnership, like I said earlier, adopt innovative financing, like we have mentioned above, and implement ESG principles. So here we are. And if we are able to handle this properly, we are sure that Nigeria can transition properly from this, our current state of deficiency in housing, to a more resilient real estate, to a more stable housing society where homelessness is reduced to the barest minimum, and we can have a more livable society. Thank you very much.
Wow, wow, wow. Thank you so very much, Architect Banye. That was, how do I put it? Very, very, very insightful. Thank you very much for that wonderful presentations. We're going to be having a few talking points, then we're going to be taking. Once again, let me remind for those who are joining, I can see that we have quite a number of us on this in this group. Please, again, if you have questions, you can put your questions in the chat box. And again, if you want to ask questions, please just do that by signifying, raising your hand, so I can get somebody at the back end to pull you up so that you can probably ask your question directly if you so desire. You said quite a whole lot in the presentation. And when you started off, I mean, you did mention, I've got one or two, like 2 or 3 points that I want you to have a further discussions into before we begin to take maybe questions from people who would have questions, and anybody who wants to also ask direct questions. You started by, let me go from the end to the beginning. You talked about this issue of ESG, this ESG thing. I want you to shed a bit more light into this, because my thought immediately is to say, now we're talking about the challenges. We want to unlock how you are going to get capital and restructure sustainable. Now we are bringing sustainability into projects. Now, the first question you want to ask immediately as an investor is to say, wow, I need money for projects, right? This money is huge, is capital intensive. And what is the essence of, if you're not introducing sustainability into it, that means that's another dimension of financing itself. I mean, to say maybe its impact on the financing of such project. What would you think is the benefit of this sustainability into projects, right? So that people want to invest, take real cognizance. I'm saying this because someone may say, to what end? Let me just build, sell, move away, make my money, and go into other things. Do you want to delve a little deeper into this issue of sustainability alongside this ESG? Now, that's one leg of the question. The other leg of the question is going to be, if you're going to be doing a project that is sustainable in nature, are there other, if your project is in this line, do you think access to this finance is more possible because of the sustainability, dimension of sustainability into your projects, as you're just doing normal projects? I don't know, maybe you get my question, sir.
Yes, I get you. I get you. So I will start from this point. Because we say we are infusing sustainability factors into the development, does not exactly mean that it will be more expensive. It doesn't exactly mean that. So now, at the start, it may be demanding as per financing, but we look at the long run. So for instance, I give you this, and that is why developers must be interested in facility management. Now, the ESG factors, the sustainability factors that we infuse starts from the design point. So it is the architects that first of all envision this. So it is a design thing. Right now, we have, if you look around, because of cost of aluminum, our windows are looking like pigeonholes. Ventilation is poor, and everybody will rely on mechanical system. So practically, I have saved money on aluminum and glass, but I am paying for diesel to power my air conditioners. So which is simpler, which is cheaper? So if we look at it initially, imagine I have a room that is almost open. I just slide my windows and I am almost 100% open. I just shade it off with my window blinds. And when I want to sleep at night, I just open them up. And then I have a feel of fresh air. I don't have to make noise at night. I don't have to burn diesel or burn gas for any reason. You know, that is one part of it. So I know that we are beginning to see the points of savings in the sustainability factors that we bring into the design. So if this is taken care of, we see that it is not actually as expensive as we think. The English is big, but the money is small. Do you get?
Interesting.
Now, that is on the one part. Now, waste management system is also a factor. We have the biodigester systems now, where you don't have to dig up somebody's father's grave because you want to sink one cesspool or you want to sink sock away. You just have them in small compartments, and then they are managed and degraded biologically, and then you don't have to dig out everywhere. That also, you will not. Okay, so we know that there are these guys who come to suck out waste from our sockaways and cesspools. Where do they take them to? Do we care? We really don't care. But that comes back to us as an impact on our environment. But if we have our waste management system within our space, where it is managed and clean air is ejected. In fact, some of them have also grown to the fact where the fumes that come from the waste system are also being used as cooking gas. So it becomes a recycled thing. It becomes a, what do I call it now? A circular kind of development where there is no waste, everything is reusable. You know, if you go to places like Delta states, Edo states, they do proper rainwater harvesting. So in that case, we don't have to, our concern about water will just be that we pump from the reservoir into the house, and that just takes care of it. We don't have to bother about multiple boreholes. We don't have to bother about mechanical systems to treat our waters and everything. So these are some of the factors that we put in consideration. So on the flip side of, I think I've taken care of one side and the other side of the power ventilation system. We've taken care of waste management system, water supply system. Do you get? If our stairs are comfortable, are properly built, I can climb a 30-story building and it will just be part of my morning routine of exercise. I don't need a vertical system or a mechanical vertical system to take me up and down. Now, we also, in looking at sustainability, we look at challenges of people who have physical challenges. They have to drive on wheelchairs and everything. So we need to now create ramps to support their movement through a height. So all of these things, if we look at it eventually, we find out that, like I said earlier, the English is big, the money is small, in the fact where we need to now infuse initial capital that is huge. We look at it over the years. What savings do we get? Look at it 5 years down the line, 10 years down the line. We now look at what exposure we have. So you agree with me that infusing sustainability factors from the design point actually saves us more beyond the whole rhetoric of the grammar, sustainability.
Thank you so very much. I love the way you are. Particularly, I'm very intrigued by, I remember I think a couple of months ago, we did talk about this green building where we brought in one, Dr. Tony, but they also talked about what you mentioned. I love your explanation of because of the cost of aluminum these days, we have our windows are like pigeonholes. But to what?
Pigeonholes.
Yeah, at the end of the day, you spend money, diesel, and all that. I mean, that makes a whole lot of sense. There's somebody who raised his hand earlier on. I don't want you to run away. I think architect Vaughan. I mean, I don't know if I get that pronunciation right. You raised your hand. If you still want to do, I know it seems you dropped the question, but I'll be glad if you still want to come up. If you still raise your okay, I can. Oh my goodness, we've got. So I think I have to stop with my own questions and let us take the question of the people. Now let me leave my own. So, architect, you ready? I mean, there's quite a whole lot of. So I've got 3 persons here. Please, Chopper, please, can you help me take the 3 of them? I can see architect Bob, I can see William Okpala, I can see Michael Olufemi. Can you promote them to panelists and let me allow them to ask the question directly? Great. So let's start with you. Please unmute yourself. Architect, the architect now, you're going to unmute yourself. You're going to introduce yourself and you're going to ask your question or make your comment. Architect /18/7233. Unmute yourself and introduce yourself and ask your question. We'll take all the questions together before the architect come to answer them. Over to you, sir.
Okay. Good afternoon, sir. Can you hear me, sir?
Yes, very well, sir.
Yes, good afternoon, sir. I really appreciate the panelists and architect Sam Banye for the insightful discussion. It was really a great time having you around. Thank you very much, sir. Okay, so straight to my name is Fortuna Ibamibon, a young graduate of architecture. I finished from FUTA and I'm currently running my master's degree also in FUTA. So I would love to ask 2 questions basically, sir. So number 1, I already put it in the chat box, if you can see it, sir. So the number 1 question I have here is the future of smart home IoTs in Nigeria real estate. So talking of smart door locks and all of those things, sir. So what's the future of that in the Nigeria real estate? So
is that all, or you want to take? I know the other question.
I think I should.
Let me just question. Architect is taking note of them. Don't worry.
Okay, sir, no problem. Then number 2 question. So I think this is just coming from an act of contemplation, and everything is just done on young graduates now talking of our body now as architects. So we actually see what is. I'm talking to architects Sam Banye now. So we actually see what is happening in the body, Akon, Eleh, and all of that, sir. So I really do not know what the bodies now are doing to see that we have a good ground in the built environment, because we've seen cases of people don't even want to talk to architects for their construction projects or their designs, or they don't even value architects, so they rather meet someone else who doesn't even know about the built environment and then consult them. And it's as though there is maybe no law, no regulation that is guiding the body and all of those things. So for instance, now talking of, I think, surveying. So I'm not sure anyone else aside being a certified surveyor can run a this thing for your land, and then I think there's a mode of payment. So there is no this, that.
That is taking. Take the next question.
Sir?
Yes, I said that point is taken.
Yes, sir, that's the second question, sir. So just 2 questions actually.
Okay,
thank you very much.
So I have them in the chat box.
Yes, I can see that, but I just didn't want you to go away. I wanted you to ask. I mean, I'm glad you raised it. It's good. Architect is taking note of them. I would like him to take all of the questions. Then we now come back to him. So the second person, please, William Okpala, can you unmute yourself and just introduce yourself and ask your question?
Yes, good afternoon. Can you hear me?
Very well, sir.
Yes, good afternoon, architect. Thank you very much. Wonderful presentation. My name is William Okpala. I represent William & Partners. I'm a senior partner. And my question is very straightforward. I looked at the strategic partnership in terms of financing, and you mentioned private equity, real estate funds. Now, we're seeking funding, we're seeking capital. Can you share with us some of this private equity?
You're muted, sir. Mr.
Hello.
William, you mute. Yeah, good.
Hello,
yes.
Can you hear me now?
Better, yes.
Yes. So my question is, looking at the strategic partnership in financing, I saw private equity real estate funds. Now, my question is simple. Can you share with us some of these private equity companies or firms that offer financing or capital for real estate development?
All right. Thank you very much, Mr. William. Thank you for joining and thank you for asking that question. So the third person, I can see Mr. Olufemi Michael. Can you unmute yourself and also introduce yourself and ask your question?
Yeah, my name is Oluwafemi Michael. I'm an estate surveyor. I work with Oyinbe Solomon Associates. Yeah, I have two questions. Firstly, with the public and private partnership. We know based on government transition in this country, as a private that join into a government entity like that, and by the time there's a change of power, we know things got distorted and this can affect a lot of things than the previous government is doing. What can the private entity do to that? And in the place of sharing formula between the public and the private, for example, there's a project which I understand about. After the whole sharing, the government came back again and said they need more. How can the private entity handle this? Thank you.
Thank you very much. Okay, I think there's another question.
Sorry,
please.
Can you take the first question? Let me take the first question again.
Okay. Mr. Femi, please, you're asked to take your first question again, please.
I'm talking about changing of power, which affects the move of things in the country. For example, we have an APC government in Lagos, and go for another party wins, and he said he doesn't want to do with any deal that is going on with the existing government. How can the private partner be able to cope in that aspect? What are the things need to be done in that aspect? Because that is not because we have many failed projects within the country based on PPP.
Okay, that's fine. I think that's fine. Architect, did you get that now? It's fine, right?
Correct.
Okay, so architect, you have one more question. I can see one name. I hope this is not this look like I'm sorry, this is just permit me. I can see somebody's name, his or her name is Samuel. Okay, just 1 minute, please. I'm trying to get this. Okay, Banye. I hope you're not related to Architect Banye. I can see Banye wants to ask you a question. So Banye, can you unmute yourself and ask your question from Architect Banye? Are you there? Unmute yourself, Banye. Okay. All right. I think so architects, can we just go on with the other three questions while we hope that Banye will meet himself later and ask the question. And if time permits us, we can take 1 or 2 more questions.
Okay, that's fine. My colleague, architect Vaughn, my architect in the making. Yes, the future of smart home in Nigeria, the future is good. And the fact that we are fully moved into IoT, that's the truth. We've moved into IoT and there's no going back. It's just for anybody that is laid back now to do a catch-up. If you sell properties, you will know that these are some of the selling points where, I mean, you come in, your fingerprint opens the door, that assures you of security. You know, at some level in that manner, assures you of security. I mean, your light switches are far away from you. You just say, please switch on the lights, and then they come on, you know. So everything is wired. You can go to Honolulu for vacation and you see everything happening around your house on your device. That is security. So IoT of things have assured us of security, and there's no going back about it. it's rather would further improve. Do you get my point? Now, on the ACON regulatory and support system, I would not want to discuss that right now, but I can give you my contact or ask that they give you my contact to do that. But let's talk about the people's opinion of architects. Anyone who is not engaging architects in their development is not doing himself any favor, and that is the truth. Anybody can put any line on paper, but nobody understands the drawing like an architect. And so I say to all of us, your architect is your best friend as far as development is concerned. The architect takes the first responsibility of helping interpret your thoughts. So if you think a 3-bedroom, those pigeonhole kind of windows, I'm sure it wasn't architects who started that trend. It was just some people who know how to join lines together and say, okay, let's save some money. But if an architect was involved, I'm sure that they would insist that, man, there is no ventilation. I mean, you agree with me, in School of Architecture, the first problem you always have is ventilation problem. Your lecturer comes and tells you, how do you ventilate this space? And then you speak all the English and the man says, there's no cross ventilation. So those are the things that we look at. So my advice is for anybody who is serious in development and does not have an architect as an ally, he's doing himself a great disservice. So for the architects, please, your roles are still as important, regardless of what the society says or whatever alternative they have said, they have put up. Your role as the architect remains. Your training as an architect is not similar to any other training. It is very unique. And I must say that because I passed through the system. So I will leave that at that, Vaughn. So you could reach out to Sonjo. I'm sure he can give you my contacts, and then we'll further our discussion on professional levels, because this is discussing finance and development. So I come to Mr. Williams Okmala, that I should share with you a bit of the private equity companies. Unfortunately, I didn't have them penned out, but of course, it's something that could be shared because they exist. Now, for you as a developer, you could set it up yourself. The private equity funds, you could set it up so that this just increases your layer of responsibility as the developer. The company takes you off that pressure. But if you have to raise the funds yourself via private equity, it means that you come to somebody like me, you come and sell the deal to somebody like Sonjo, you talk to Vaughn, you talk to Femi, and then all of us will bring our 1 billion or 2 billion to support your project of maybe 300 billion. And then you keep talking to people, and then you have finance houses. There are a few of them in Lagos. We have the non-interest finance institutions that can also support you. I don't know if I can advertise, but let's keep the rules of engagement intact. There are a number of them along the road that we can always see. We can do a quick browse over the internet, non-interest finance institution. They would clearly support this. I will do a one-page and possibly send to the host of this webinar, so that for all of us who registered and have our emails, it can be sent to us. That is the private equity companies, just in case we want to harness or assess their facility or their products. Now I come to Mr. Oluwafemi Michael about sharing formula government-private entity. You see, it's important that you have legal systems around your development. And it's a no-brainer. It's a no-brainer. Like, people think that architects are not important. Some other people think that lawyers are not important. But in this case, the lawyer is as important as the architect and vice versa. Your legal framework cannot be done via ChatGPT. Your legal framework cannot be a downloaded document on Google. You need to get, and good enough right now, we have legal professionals that have specialties. There are some of them that are specialized in construction. Some of them just do real estate, and that is management side of it, not the construction side of it. Some are in construction legal businesses, and the list goes on and on. So you want to have a good legal framework to support whatever you do. If the government comes and says we want more, it doesn't come for free. What does the agreement say from the beginning? You know, you want to go back to the papers, to the fine lines, and look at what do we have from the beginning, so that that becomes your reference. I give you an instance. There was a joint venture partnership somewhere in Lagos between a young man and quite an elderly man. The man comes today and says, I'm thinking we should add XYZ to the building. Okay, the developer says, not a problem, it won't cost much. He does. And then 3 days later, the man wakes up from his dream, calls this young man, says, I'm thinking we should add XYZ again to the back of the building. The guy says, okay, not a problem. He does. And then that cycle continued until the end of the project, when the man made a demand that was too expensive to handle. And the developer said, Baba, this is not in the agreement. And what did the old man tell him? All the ones we have been changing from the beginning, were they in the agreement? Do you get? So when you have a legal framework, you also have a responsibility to stick to it. So that means you, as the developer, you must have a 360 view of what your project is going to be coming like. Now, ask your lawyer all the questions. They know how to use English. Sustainability to us developers and professionals in the built industry may not mean sustainability in the line of the legal framework of things. So you want to clear out those statements so that you are sure that everything that you are going to sign off, you understand. And also have a lawyer as a friend. Make a lawyer your friend like you make the architect your friend. So that when the other lawyer is trying to bamboozle you from the side of the other party, there is another learned colleague of his that is saying, no, this is the way it should go. So there needs to be a protection system on the legal side of things. And that's what I will say to you, Oluwafemi, as per the sharing formula. Now, political landscapes and how it affects our projects. Honestly, if you have had a problem here, I don't envy you, because it is heartbreaking. But what can you do to protect yourself? Make sure you structure your projects within the timeline of the day's government. So if I have to do any government with Lagos government now, I want to do any business with Lagos government now regarding development, I will structure it for 18 months, because I know that the man has practically 2 years to run. The remaining 6 months is for us to tidy whatever is left as per paperwork and all of that, pre and post construction. So that keeps you security, keeps you in good shape. You don't have to come and talk to the Mr. Next governor from XYZ party that does not believe in whatever project Mr. governor from APC currently is doing. So you need to structure your projects within the timeline of things so that way you are protected. You won't have to fall into the political instability or political volatility that might come up as per your project. I hope all of this made sense.
Yeah, architect, you've done justice to all of the questions. I think I noticed somebody raised his hand, but I can't see that the hand is raised again. Please, if you may want to, I think it's Daddy Yemi or something, I can't remember, but I can see the hand is lowered. But it's fine if your question has been answered. Let's take 2 more comments and then we'll wrap up. Thank you so very much, architect, the question had actually practically answered most of even the talking points in my end. There is a question here in the chat box from Mr. Chudi Ubosi he's saying, what is the NIA doing about the massive number of buildings that are coming to light as being built on drainage channels? You get that right, architects?
Yes.
What is the NIA doing about the massive number of buildings that are coming to the light as being built on the drainage channel?
Okay, so to take care of that, buildings coming up on drainage channels is largely a regulatory problem, more than it is a professional problem. These buildings on drainage channels, we want to first of all ask questions. Did they get approval? If they got approval, on what basis did they get the approval? Because drainage systems are managed by governments. And the best I know is that the Lagos State Master Plan captures drainage lines, road networks, and every other infrastructure, whether built or proposed, is captured in the Lagos State Master Plan. So when you submit for approval, the first thing they do is to chart the survey to tell you whether the coordinates are correct, whether your boundaries are not encroaching another man's land, whether you are not sitting on drainage lines and all of that, whether you are not encroaching also on government property. So those are the things that is done. So for a developer, for instance, and you submit for approval, these are the checks that will be done. So once you get approval, NIA, Nigerian Institute of Architects, do not have a role in approval processes. So it is largely a regulatory thing. So for the man who built on drainage lines, we need to ask him, when you procured this drainage line as a land, did you do due diligence? And that is why for us, all of us in the built industry, due diligence needs to be part of our names. We need to add it. So for somebody like me who is architect Sam Banye, I put due diligence as part of my name, so that it reminds me always that I have a responsibility to verify. So for all of us, we have a responsibility to continually verify. Like I said earlier, registered survey does not confer ownership. Registered survey tells you the boundaries of your land, tells you it exists. So when that happens, you know the status of the land. So for Mr. Trudy, I must say that we need to ask the government officials who approve those projects that are built on drainage line. Again, there is progressive supervision on every development in Lagos State right now. So where are the government officials who have this responsibility to supervise these projects? And then they saw the project, gave clearances at every stage until the building was roofed and it was certified as fit for occupancy. That is not the role of the NIA. You know, you bring me a survey to deal as an architect. I will deal. I expect that you, as my client, have done your due diligence. So if I ask you all of the questions in this world, you tell me all of them is yes, and you are fine. What do? I make progress. So in the line of the question, really, I would say we need to ask our colleagues who are in government how these things get by under their nose. Thank you.
All right. Thank you very much, architect. So please, I think one more question. I can see that William is here now. No, sorry. Oyewale Kehinde, sorry. Oyewale, please, can you unmute yourself and quickly ask your question? I think we're pressed for time. You can quickly ask the last question so architect can do justice to that.
Thank you, architect. Can you hear me, sir?
We can hear you, please.
Please, can you buttress more points on the JV agreement? And we'd like to get the presentation of the slide of presentation. Thank you, sir.
Okay, so
regarding the presentation slide, you can be sure you get it to register email, but architect, you want to quickly delve into a little bit more on the joint venture so that if there's anything you want to add to that.
Okay, so joint venture partnership in the simplest form is Mr. A has a land, you have development interests, and you have funding sources. You come together, have that discussion. This is what is possible on your land. So on this size of land that you have, for instance, XYZ 1,000 square meters, we can put up 10 units of 3-bedroom apartments. We can put up 10 units of 4-bedroom terraces, block of terraces here. You have that agreement. And then based on the value that each of you have brought to the table, what is the value of the land? What is the value of the development that you will eventually put up? So we are talking now 29th May 2025. The land costs, say, 10,000 naira, for instance, and the development. If the land costs 10,000 naira, your development cannot be less than 10,000 naira. It means that you are not optimizing the value of the land, because you need to, first of all, recoup the cost of the land, right? And then share profits. Now, if your development is less than the value of the land, it means that the owner of the land is leaving that project on a loss page. So for you, the developer, you need to know your figures. What is the cost of development? Both of you come in as partners. You are not buying a land, and the landowner is not buying a building from you. So both of you are bringing in what you have. It's like me and you coming in and say, I have 2 naira, you have 2 naira, we bring it together, we invest in this development. When we are going, we share according to the equity that we have brought to the table. So you agree on how you share based on the value of individual parties' investment. Your JV also can be multi-layered. So I have met the big man who has the land. The land costs X million, X thousand naira. And then we are putting up a development that is 3X million naira. But myself as a developer, I don't have this 3X million naira. And then I come to Sojo and says, Sojo, you know what? We have this development. I have half of the construction cost. Can you support me? If you do, this is the sharing formula. I already have this sharing formula with the owner of the land. So for instance, we say 50-50 sharing formula with the owner of the land. I have 50, the man has 50. So between myself and Sonjo now, based on the value that we put on the table, we now determine, okay, you have 1.5x, I have 1.5x. Okay, so on this second layer, it becomes another 50-50. Do you get? So that is the way it works in a multi-layer kind of joint venture partnership. But in the simplest form, it is the landowner and the funds owner. I don't know if that makes sense.
Yeah,
Yes, sir. Thank you.
that does. Thank you so very much, architects. I mean, this has been a wonderful session. It's been a wonderful session, and I'm sure that for everyone who have joined in this session can testify that this has been a very impactful session. Thank you once again, architect. I can see that
My
if you
pleasure.
person there's this question about. Please just drop your email address. You can be sure if you can quickly drop your email address at the back end, they're going to get the email address so that and just state particularly for the one who wants to get the number, the contact of architect. You just state it particularly. Talk please at the back end. Please let me note that so that we can send the number of architects to him. We'll do that. You can be sure, and you can be sure that we're going to send the slide to all the registered email addresses. Somebody here says, Faith, I think, said, wonderful presentation. Thank you, sir. Would you be sharing the slide? Yes, we will be sharing the slide. Say ESG is really an important aspect to development, both in terms of financing and also for the dwellers and residents. Yes, just like the architect has actually said. Thank you very much for all. I'm trying to see all these other comments. Yes, okay, yes, Architect Vaughn, yes, we'll get just drop your email address. Doctor, please, can you help me just address this email address for those who are here, and particularly for the one who would need the number of the architect. Please just drop them, and Tucker is going to address those email addresses. Get the email addresses, I mean the slide, and also you can go back to our YouTube channels, not just do as well to just like our YouTube channels. You can like them, you can go over and look at all these presentations all over, and I'm sure it's going to be a wonderful time. Once again, Architect, thank you very much. Architect is the Director of Projects at the Technical Service at Cardinal Project, and he was also the founder of Prometic Works and Company. Thank you very much. We appreciate your coming.
My pleasure.
And honestly, you have done great justice. And you can be sure we are coming back, Colin. There's still a lot to talk about. So it's going to come back, Colin. And I'm sure you are going to oblige us to come and just do justice to this so that in this built environment, we can make our impact and let people know what should be done. This webinar is brought to you by Ubosi, Eleh and Company. It's Real Estate Today. Look forward for the one that will be coming up in the month of June. And it promises to be a wonderful time. We urge you to please go back to the YouTube channels, watch all the previous edition, and tell other people to also register and look forward for the one coming up in the month of June. We are grateful for you joining us, and we look forward to seeing you some other time. Do have a wonderful afternoon, and God bless you. Thank you, and have a wonderful afternoon.
Thank you.
Thank you, sir.
As we navigate 2025, the horizon is filled with potentials. Get ready for our upcoming reports, packed with in-depth analysis and forecasts to guide your real estate decisions.